Watching us here on Chartbusters, Tata Consumer is the top nifty loser in today's trading session. Post the numbers. Let's talk about the management conversation post numbers as well. We spoke with Sunil D'Souza, who's the MD and CEO of the company. Started, of course, by asking him about the key guidance that he has for FY25, and then beyond all the other things, the scalability of the acquisitions, etc. as well. So let's hear out that conversation with the MD CEO of Tata Consumer.
Coming specifically to our targets for next year, the single biggest important objective is we've done 2 acquisitions. One we closed during the last financial year, one we closed just this month, which is Organic India. I think integrating them, we've said that we will integrate it in 100 days. I think that is on track. Capital Foods, front end, back end done, and now it's for value creation. Organic India, we're starting on the front and back ends. Again, we'll complete the whole integration in 100 days. Generating value out of that, that's priority number 1. Priority number 2 would be jump shifting the volume growth in India, specifically focus on beverages. Salt, I think we've always maintained about 5% will be the secular long-term growth in volume. We're at 4, so almost there. The growth businesses, we've said now with Capital Foods and Organic coming in would be 30% of the portfolio. Delivering a 30% growth, I think focusing on that. We've said 15% EBITDA is par now. We've got to improve from there. We've got to continue to improve our working capital days. We've said double-digit top-line growth and EBITDA ahead of the top line. ROCE, actually, last year was a very pleasing figure. Last quarter, we upped by 380 bips. Continuing to work on that number. Most importantly, continuing to fuel all the pieces that will drive growth. Advertising and promotion, innovation, distribution, and most importantly, building out our talent for the next leap forward.
Right. So let's get a little more specific about the numbers. You said double-digit revenue growth is what you're targeting. If you could tell us, what does that mean? Is it mid-teens, low double-digit, or above 20% sort of growth that you're targeting? If you could break that up for both India as well as international, and in India as well, what would beverages grow at? What would food grow at?
So beverages, if I take the base core business, Mangalam volume at about mid-single digits, a couple of basis points on that on value. Similarly for salt, mid-single digits and a couple of points on value. The growth businesses, which now account for 30% of India, growing at 30%, that would be the guidance. And our international businesses, we said mid to high single-digit growth while continuing to deliver top-notch margins. That would be broadly what we would look at.
On international, what kind of margins are sustainable over the next year? And you said 15% is your benchmark for the entire year. Last quarter, you did about 16.1%. So should we see an improvement upwards of 16% in FY25, given the scale-up of your acquisitions too?
So, Mangalam, for the full year, we've delivered 15.3. I would target upward revision from 15.3 for the full year. There will be a little bit of ups and downs, but broadly, we're very confident that 15.3 is the base now, and we will continue to improve from there.
Let's talk about Capital Foods. The 2 months that were integrated in this financial year did about 80-85 crores of revenue. If I was to, look at it being now available in 95% of your overall distribution chain, it amounts to about 100-120 crores per month in terms of revenue. So are those targets that you're looking for in FY25 when it comes to Capital Foods, around 1,000 to 1,200 crores on the top line? And for Organic, what's the revenue target for this year?
So Mangalam, for Capital Foods itself, you're absolutely right. We've delivered about 85 crores of top line for the first 2 months. But you would also remember that the first 2 months, there was a lot of integration work in process. We re-indexed a lot of channel inventory. We restructured a lot of systems and processes out there. Now, going forward, as I said, the focus will be on value creation, distribution expansion, fueling advertising, and most importantly, I think they've got one very strong brand and one decently strong brand, Ching's Secret strong, and Smith & Jones, I think we've got to polish it a bit. But a good innovation pipeline for both of these, expand the innovation pipeline. On the Organic India piece, I think the critical piece is, as I said, it was only 24,000 outlets. Getting it to our distributors, work has already started. Expanding the distribution and jump shifting the top line. I think those would be the big focuses.
Well, you're speaking a lot of qualitative details here, Mr. D'Souza. I just wanted to know, if around 1,200 crores, which is about 100 crore per month, possible for Ching's in, rather, Capital Foods in FY25, and what's the aspirational revenue target for organic in FY25?
So let me put it this way, Mangalam. I think about 650 to 700 crores is where Capital Foods ended for the last year, given all the upheavals of the fact that they were in the market for a long time, and then we had a lot of channel correction, etc. I would say significant double-digit growth on Capital Foods is what we would be targeting. Organic India, including international, delivered about, I think, 350 crores of revenue. Again, substantial increase from there, substantial double-digit increase from there is what we're targeting. And you're absolutely right. When these two businesses come in, our percentage EBITDA margins would improve significantly. Capital Foods, already in the first 2 months, we're seeing gross margins more or less where we expected them, which is significant increase to what we have on our portfolio. Organic India goes one step further, especially with the supplement portfolio, etc. So we do expect overall margins and therefore EBITDA margins to jump significantly.
Narishko, when we spoke same time last year, you had given a guidance of about 1,000 crores for FY24. Obviously, because of seasonal issues, etc., you're short of that, around 825. What's a realistic target for Narishko in FY25?
So Narishko remains on a very, very strong wicket, Mangalam. We've added about 50% more outlets from where we started for the year. Our innovation is now 20% of their revenue. We had guided for 900 to 1,000 crores for the year, but ultimately fell a little bit short because, it's a very anecdotal piece. In India, especially in the north, summer starts when Holi starts, and Holi was about 20 days behind where it was last year. So I would, and this has been a good summer so far. So I would expect top line growth to be significant. 30% plus would be the guidance for us going forward.
All right, so around 1,200 crores is what we're looking at in Narishko. For Starbucks, I mean, again, fourth quarter, 7% growth as against the full year growth of 12%. Are you expecting it to pick up at some point?
Starbucks, overall, if you look at the QSR space in India, Mangalam, it's run through a slightly rough patch in Q3, Q4. Overall, traffic has been the issue, not as much as average ticket. But we remain focused on the longer-term opportunity for Starbucks in India. Yes, overall revenue growth was a bit tepid. But the good part is March was better than February in terms of traffic in outlets, and April so far has been better than March. So we remain confident that this business will come back.
At 1,000 stores by end FY28, would it make sense to list Tata Starbucks separately outside of TCPL?
So Mangalam, right now our task is cut out to deliver those 1,000 stores by FY28 and a profitable business at that. We remain focused on that. We will take decisions on what we want to do longer term at a later point in time.
Take that point. Mr. D'Souza, you've given us targets for the entire year, double-digit revenue growth, margins upwards of 15.3%, 30% growth in your growth businesses, 30% growth for Narishko as well, and sharp double-digit growth for both your acquisitions with increased margins. Final question then, and this one's more on the regulatory front. We've seen a lot more news around, spices, food regulators coming in for prepared dishes, etc., the quantum of sugar. Would you have any comment on this to make from where you stand at a portfolio level? Would there be a risk for some of your products on this as well?
So a couple of points on that, Mangalam. As the economy develops, as consumers become more aware, we would expect our regulatory standards to go up. So it's no surprise that it is starting to pick up, number one. Number two, we are a Tata company. We're very, very clear that we will follow regulations very, very clearly. Most importantly, we've set ourselves a very clear nutritional policy in all our products, making sure that what we offer to consumers is in line with long-term aspirations. A. B, making sure that our quality standards are top-notch. And that's one of the reasons why I would say Sampann delivers what it delivers in terms of growth numbers, right? Because it's fundamental. The Tata name denotes trust, and we will deliver that trust to consumers.
Take that point. Thank you so much for joining in. Wish you good luck for FY25.
Thank you.
Well, interesting chat there, Mangalam, with the management of Tata Consumer. For the time being, though, we'll slip into a short break. As we do that, we have an announcement to share with all of you. we are launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate, Personal Finance Handbook, with Sonia Shenoy, where she'll be joined by 3 well-known experts on Saturday, 11th of May, 9 a.m. onwards. Well, we'll be diving into everything you need to know to master your finances and learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. That's lots to learn and lots to do. So whether you're in your 20s, 30s, or even 40s, this live webinar is for you. We have limited seats, so don't miss the chance. Register now, scan that QR code to register, or log on to cnbctv18.com, and we'll see you on the 11th of May.